Let's turn our attention to the oil market. OPEC Plus has finally come to an agreement on supply cuts. However, adhering to those reductions is going to be the real test. So far, OPEC has pumped well below the agreed level, but that's largely due to Saudi Arabia's overcompensation. Non-OPEC adherence has tumbled to 61%. Bloomberg calculations show the numbers. And despite the recent reductions, Iraq has historically pumped more than pledged. Russia and Nigeria are also serial offenders. Bloomberg's executive editor for energy and commodities, Stuart Wallace, has joined me in the studio in London alongside Ricardo, Evangelista from Activtrades. It's a round table. Gentlemen, good morning. Stuart, to you first of all. You've created the rogues gallery in terms of non-compliance, but the Saudis have agreed to cut in size, but it is based on compliance. Do you trust the deal we walked away from Vienna with?
No, not in the slightest. And I think the problem here is that the countries that have the highest levels of non-compliance, to some extent, have a very strong argument for saying they shouldn't comply. They are some of the most economically challenged countries in the world. You know, they have terrible civil strife problems. They need all the cash they can get. You know, on the other hand, yes, Saudi Arabia has been doing most of the heavy lifting, and really it's Saudi Arabia that the market is looking at. So we've had early indications from Nigeria, that meeting that we were all at last month, that they would do more. Iraq seems to be moving in the right direction, but fundamentally, does the market believe they're all going to suddenly snap into line? I don't think so.
So you don't think so. I suppose the question is this: what do they need to do, Stuart, do you think, to re-engineer some confidence in the market? What would change the narrative for you in 2020? Is it the demand side or the supply side?
I think it's more on the supply side. So what we're looking at is a further deterioration potentially in Venezuela and in Iran and in Libya, potentially Nigeria, maybe Iraq. And all of those areas might help them out in the way that they did this year, because let's not forget that a lot of the heavy lifting, yes, was actively done by Saudi Arabia, but a lot of it was done sort of by accident or by mistake, in the sense that, you know, production went offline because of attacks or because of unrest or whatever it happens to be. On the supply side, we're also looking very carefully at the shale industry. So obviously now the US is the biggest producer, is gently becoming a net exporter, and that's completely redrawing the way that the US is thinking about geopolitics, particularly in the oil-producing regions. So again, we're looking for evidence that that's sustainable into next year and that the financing is in place, that they can keep production growing at that kind of rate in the US.
OK, hold those thoughts, Stuart, but we'll come back to what the price target is for Saudi Arabia, because I was quite surprised in the budget it's lower than it's been historically. Let's bring in Ricardo. Ricardo, I want to bring it to you. You have a view on oil. You predict higher prices going through into next year, and yours is predicated on the demand from EM. So where do you set the benchmark for oil going into 2020, given what Stuart has just outlined?
Well, I think if we get to a price of a consistent price of $65 around that mark per barrel, it wouldn't be surprising. So that would be my benchmark for 2020.
And in terms of the FX strategy play, then, if I look at the commodity-based currencies, if we pass through the eye of the storm and the worst global manufacturing is past me, if there's a trade deal, phase one, phase two, there's a lot of ifs in my proposition to you. Is that what breaks the $65 for you consistently for Brent to stay above there?
Well, of course, if the global economy's outlook becomes more positive, and we see consistent growth across the board in developed economies and also in emerging economies, then of course oil price will be pushed up, will be supported, and so will be above $65. That is my base case, that it will be above $65, mainly driven by emerging economies rather than developed economies.
Stuart, let's just round it off with you. If oil's above $65, that's going to make Prince Abdullah Aziz really quite a happy man, who was in OPEC with us. I mean, to what extent do you think, briefly, Stuart, that the Aramco IPO pushed them to do the shock and awe 400,000, which Julian Lee questions? But give me the sentiment.
I mean, I think, for one, I think happy is a strong word. $65 is fine, you know, it's better than 64, I guess, but it's not enough to break even on their budget. And at a time when they're trying to turn the entire economy around after several decades of one system into something a bit more strident, a bit more industrialized, you know, they're going to need a lot more cash in the bank, and the Aramco IPO so far hasn't provided it. And I think, or rather we generally think, that the odds of an international listing this year and further equity sale are pretty unlikely.